Hello and welcome to my daily stock review. So every day I'm going to try to go over a different stock and review its characteristics, aspects, potential for making money with the stock or trading options or ideas. And let me just say this is Chipotle Mexican Grill. And right now the stock is at $500. So that's a nice round even number. And if you look at some key points, and the idea of these videos is just to educate you about the information, the information of the stock, and some ideas about the stock. It's not necessarily to try to convince you to buy or sell or invest in the stock, but really a discussion about the stock. And it would be great if you liked this video, subscribe to my channel, and left a comment, specifically looking for comments where you have stocks that you want to know more about or you'd like me to analyze or talk about. So leave that in the comments below, and that'd be great. So right now, I like to eat at Chipotle Mexican Grill. I think it's a great restaurant. They've been expanding quickly, and the stock, since I've been following it, has gone up tremendously. So let's look at how much the stock has gone up over the past 2 years. So let's pull this up. And I use Yahoo Finance for pretty much all my stock charting. And let's go back 5 years. Okay, so 5 years, you can see that the stock has, oh, this is the volume. I don't want the volume. You can see, though, how the volume has generally increased in the stock over the last, this is the volume down here, over the last, 5 years or so. And if we look at, all right, so here we get the peak of the stock was $600, and then we had this pullback here in the month of March and April, and that really represents all the growth stocks had gotten very overvalued, and there was a pullback on all the growth category stocks. Sort of a realization of people profit taking and worried about a stock market crash or a big correction. So a lot of people have done a number of profit taking that took about 20% of the value off of this stock. So is it worth buying now? We're going to be discussing that. So if we go all the way back, let's go back to 2009, and the stock was about $83. So you can see how much the stock has gone up over the course of 5 years. Tremendous increase. And if we go back to the max when this was an IPO all the way back in 2006, the stock was trading at roughly $50, and now we're at 500. So in about 8 years, a tenfold increase of the stock. And you could see that we have a nice run up of price, 1,000% increase from January 2006 to May 2014. So a really nice growth stock here. But let's examine, why did this stock grow so tremendously? And really the answer is, sales. So let's get the key statistics on this stock. Okay, so here the market cap, which is the total valuation of the company. So the stock market is saying that this company is worth about $15 billion. So that's a tremendous amount. Now the PE ratio on the stock, and the PE, you can always find that in the summary page. Here is 46. About 47 is a PE multiple. So let's look at the key statistics, and then under the key statistics, you'll see that number on the trailing PE, and that means this is the PE of the price to earnings that's today, and the stock price divided by the earnings per share, and it's trading at 47 times earnings, and that's significantly higher than the S&P average of about anywhere between 15 to 20 times earnings. So this stock is, think of this as a like meter, and this is a very well liked stock. And one of the reasons the stock is so liked is because there is good revenue growth. Here we have a year over year of 24% revenue growth, and we have a nice earnings growth as well, year over year, an 8.5% earnings growth. So the stock is growing strong. It has a nice strong cash position of $700 million, zero debt. So that's a low risk right there. Cash per share is $22 per share. And that basically means that if you look at the total cash divided by outstanding shares, let's see, in the last year it's gone up 32%, and it's been as high as $622, as low as $350. And the short position is relatively weak. Any stock that has a short position, especially a growth stock less than 5%, that's a good sign. So there's not a lot of shares sold short. So most people have confidence in this stock. And you can see here that the institutions own a majority of the shares outstanding. And there's 31 million shares outstanding, and then 30 million are in the float. So that's a decent size of shares outstanding. So, and the beta is 0.85, which means it's a little less risky than the market. Okay, so but basically it's a fast food company, which this is an outstanding valuation for a fast food company. And let's just look at the profile here. So if we look at the stock, we see that it's definitely, it's a restaurant. They have, see, as the company operates about 1,500 restaurants. Now, 1,500 restaurants for a big chain, that's a relatively small amount. They can, I think the maximum amount of restaurants they could open up, probably about 5,000. They could have and still not have oversaturated the market. So they're probably going to grow. From this point, they could probably double 2 more times the amount of outstanding restaurants. And let's see. What's interesting over here, the key executives, the executive officer gets paid $4.8 million. The co-chief executive officer gets a $4.1 million. This CFO, $1.8 million, and the chief marketing director gets $1 million. So nice company to work for if you can get one of those top jobs there. All right. Okay, so something I also like to look at is I'm always interested in the headlines, what's recently happening with the company, and you always want to check what was the last earnings report on the company. So let's see if it's in. There's actually a lot of news released on this company. So this is a big company. They have a lot of news, and I don't know if it's going to be so easy to find the earnings report within the news. Okay, we're going to move on. Oh, let's look at the press releases. It's usually within that. Okay, so here's the first quarter results, earnings announcements released April 17th, and the revenues increased 24%, which we know from key statistics. So that is a nice increase of revenues. And comparable restaurant sales increase, 13% increase at the restaurants. Operating margin was 25%, which did decrease, which is something we don't like to see, but there has been a decrease in the operating profit margins at the restaurant level. Net income is $81 million, which increased to 8.5%, and earnings per share is about $2.64. And opening 44 new restaurants. Okay. And then down through here more, they'll actually describe. What's really important is the outlook. So they're looking for 2014 to open about 200 new restaurants and have an effective. So that's going to be, if we saw before they had 1,500 restaurants, and they're going to open about 2,000 restaurants. So that, opened about, say on the high end, 195. So I'm going to divide 195 by 1,500, and that's going to be about 8% increase the amount of restaurants. So that should lead to nice increase for the stock. Okay, so let's go back to the main overview here. So it is a growing company still. And let's see what the analyst's opinion is. And this is nice. You click analyst opinion, they give you a little chart here, and you'll see that we have going to look at the last month. We have 10 analysts that say it's a buy, a strong buy, 6 it's a buy, 12 it's a hold. Nobody is really saying it's a sell or it's underperforming. So analysts are pretty much in favor of the stock. And then the analysts, you can look at their expectations as far as earnings, revenue, history, EPS, growth. So you can see that they're all pretty much going to be stock's going to be growing around 20%. So this is a good idea to get an idea of what the analysts are saying or thinking about the stock. And it looks like, if you think about this Chipotle Mexican Grill restaurant, there's nothing that's really going to stop their growth. They have the money. They don't have any debt. They're going to open up, a similar amount of restaurants this year as they did next year. So there's going to be a continually moving forward growing opportunity. And they haven't even really become international yet. So there's a lot of restaurants they can open up worldwide as well. So there's a lot of growth in the future of this company. And that's why it sells at 47 times earnings. Now, as the company does mature, that earnings per share multiple, the PE multiple, will become lower. But let's hope that the earnings accelerate to a point where we can still have a higher stock price even with a lower PE multiple. All right. And we can also look at the insider transactions and see what have the insiders been doing as far as sales and purchases. And we could see that the total net is that there's been selling. A lot of about 10% of institutional shares have been sold. And so there has been selling, and this could be the profit taking I was talking about, where the stock got very overvalued at 600, and insiders and institutions have been selling to capitalize on what they think is sort of a temporary top for the stock. I'm going to just pop over here to look at the financial statements. If we look at here's the annual data, and we can see that revenues went from 2.2 to 2.7 to 3.2, and you can see, so that's about a growth of $500 million a year in revenues, and that is in line with the amount of restaurants that they've been opening up. You can see a nice growth in income as well. So the question is, let's switch to quarterly, and we see that over the quarters they've been steadily growing as well, even during that difficult winter season we had with the harsh winter. Okay, so let's look at some technical. We know the fundamentals of this company are strong. They have a good brand, a good product. They're continuing opening restaurants. They have plenty of money, very little debt. So the company is chugging along per usual. I don't really see anything stopping this company. So the question is, should be this, definitely everybody should be considering buying Chipotle Mexican Grill because it is, a good story, a solid restaurant, solid product, good future. But the question is it still overvalued at 500? So I'm going to do some basic technical analysis to kind of get an idea. And what I'm going to look for here is I'm going to look for the RSI, Relative Strength Index. And this gives me an idea if it's oversold or overpurchased. And you can see over here when the stock was under 400, when it reaches 20, it's been oversold, and when it reaches 80, it's been overpurchased. So there's been a couple opportunities to buy it at the 20 line. So usually when a stock hits the 20 line, that would be like here it hits the 20 line, and here it hits it, and here would be opportunities to buy. But right now it's saying that the stock it's sort of in neutral area. It's not oversold or overpurchased. So it's sort of in a neutral area. And I'm going to throw up the 100-day moving average and the 50-day moving average is what I like to work with. And we can see here that this is a little troubling because the stock went below its 50-day moving average, and then below its 100-day moving average. And each of these moving averages are support levels. So we have two technical indicators saying stay away from the stock. And now it looks like the 50 days is about to cross over the 100-day. Sorry, the 100 days is about to cross over the 50-day moving average, which is another technical sell sign. So technical analysis is saying this is not the best time to buy the stock. The chances are, technically speaking, the value of the stock has further to drop. So there could be an opportunity moving forward where this stock could be cheaper. Technical analysis saying this stock is most likely going to be a lower price in the future than a higher price. So I'm going to put up some Bollinger Bands. These are statistical, 2 standard deviations, and we could see that statistically the stock is here touched the lower end of the Bollinger Band, which means it should bounce back up, which it has done. But it's sort of also in a neutral ground here where it's between a top and bottom Bollinger Band. So it's really, there's nothing dramatic about this chart, other than it is in a triple sell position as far as these three support levels that have been broken. So it kind of is demonstrating a technical analysis of the stock should go lower. And the fact that it's not really touching the bottom of the band means it does have some room to move lower. So, but this is, the next, probably throughout the summer, the stock may be flat to neutral. It's going to be, I think it's going to be around this $500 price, plus or minus $25, probably throughout the summer, mostly because of market factors. Long term, I guess this is definitely a stock to own long term, but we all would like to buy it at a price that would be, getting the best price possible for it. And I would say that if there is a market correction in the summer, 10 or 20% stock market correction or some sort of panic, that this stock could easily fall back down to 400, maybe even 350. And I would certainly consider adding to my portfolio at that level. But right now, it's sort of a wait and see for me. I would, really like to see what's going to happen next, because it's a quite interesting. Technically, it's kind of interesting, the story that it's telling. And let's just look at. Let me put another. Curious to see the volume on this. Okay, so down here we have the volume. You can see there was a big spike here, so there must have been a heavy trading day here. And the volume sort of works. You can see this volume is actually attributed to the earnings report. And you can see how within the 1-year chart we have 4 big spikes in volume. So it looks like when the earnings reports come out, and we know that the earnings report came out in April, and there's probably one coming out soon in May, that shows that there's a lot of trading activity. And typically it looks like the earnings reports, if they're good, the stock generally does bounce on the earnings report. So it'll be interesting to see that. I'm sure the new earnings report are coming out soon. Might be a short opportunity if the earnings report is good, which it usually is. The stock could rebound a little bit based on that earnings report. Now, a message boards is another way to get sort of an idea what are other traders thinking about this stock. And so here is, this is to be taken with a grain of salt, because they'll say anything to goose the stock up, or, only one out of, I think, 20 posts are really truthful about what people are thinking. The rest are trying to convince us to do something. So I don't really pay too much attention to the message boards, but sometimes you can glean some good information off of that. And I'm curious to see the options on this, what the options are saying, because the options can give us an idea based on, if we look at, let's go to the break-even mark here. We'll see at the $500 level, the options are trading about $9.60 to buy a call option, which is, if we take that $9.60 divided by 500, it's about kind of 2% of the price. So it's telling us, which is relatively low premium for a stock. So the premium market is saying, in the premium, it's not really factoring a huge upward price change of this stock based on the contracts they're going to expire on May 30th. And I always look at those relatively soon contracts. And if I see, if this premium price is between somewhere 3, 4, or 5%, we know that there's a good chance that the stock should move up, because the premium is sort of a measure of how the likelihood that this call option will be priced higher by the end of the month. So they're not really, the options market isn't really seeing much of a price increase on the stock by the end of the month. So again, to recap on, I try to keep these videos about 20 minutes, and I'm going to hopefully try and post a new one every day. So to recap, it looks like the fundamentals of this company are very strong. Good balance sheet, low debt, nice consistent growth strategy of opening new restaurants. So long-term fundamental analysis, this is a great stock. Short-term, technically, the stock looks like it's sort of in a trading, has a trading issue where it's now past the broken through its support levels, and it seems like some of the enthusiasm for the stock has really declined over the past month or so, which I kind of feel that it's probably going to continue to decline for a while, and that you should watch the stock until it gets into a trading range of maybe $350, $400 may be a good point to jump in and purchase the stock as an investment, because long term this is gonna, I could see this being one of the big fast food franchises up there with Wendy's, Burger King, McDonald's, and certainly over the long term this company has a good prospect. It's just the short term right now, I don't think there's too much money to be made. So okay, that's it for this video. Thanks for watching. Please like, subscribe, and comment on other stocks you'd like me to analyze, and I will be more than happy to do so. Thank you.